Today, we are going to take a look at the coin 0G USDTP. This has been recently listed on Binance on the 17th of September. Now, today I'm going to go over the technical analysis of 0G, if there's any potential for still upside, and of course, downside. We're going to do so in an unbiased perspective so we can come to the best possible trading situations. Let's get into the technical analysis. First up, I want to start drawing in our structure. This was the listing price on Binance. It made a high, a higher low, and a new higher high. While the coin was just listed, we already started uptrending with heavy moves towards the upside. A move like this is no joke. It's 70-80% on the coin. So let's just continue with our market structure. We started consolidating here, which is fine. We can build up all that liquidity to then take it out and continue our move towards the upside. But we actually front ran our biggest liquidity point here. Then we didn't have to take it out for in order to gain that upside, but you would have preferred to see so. That would mean there had been more orders skilled in here to push the price up. This is going to be an area that we have to point out as equal lows because it could be a magnet for later. Also, with this open demand down here, could be a great area to look for longs from. And continue breaking down this price action. We have this higher low for another higher high. If you take a look at this bit of price action here, I like what we did here. That is because we took out our new high. Then when we took that out, we got a liquidity hunt from the bottom. So a lot of people went into FOMO buys after we traded above a high like this. They're getting stopped out, and then our move continues towards the upside. I think that is strong. That is strong continuation of our trend. So to keep that bullish momentum up, I do not want to see price come below this point. So we can test it, but we want to see reaction from here towards the upside. If we fail to do so, hold this, then this becomes resistance and we're going to go towards our next area. So we've made the higher high, a higher low, and another higher high. Well, if you take a look at this, this isn't a convincing high, right? It's just a wick. So that means the market needs to consolidate. And when the market is consolidating, we're building liquidity on both sides to take out one side and move towards the other. In this range, we have our first deviation from our high. So that's also our first possible market maker signal that big whales could be stepping in here to push price down or at least sell the positions that they have scaled in here. So signaling this, I actually want to look for some shorts on the higher picture. That doesn't mean we can still trade towards the upside, but on the high time frame, I do have to draw in my scenarios for this possible liquidity schematic play out towards the downside. This would also be great in combination with this leftover over demand, and we've never tested this part back. So what do we do when we have a range in our first deviation? We're going to draw in our extreme liquidity. We are also going to draw in our extreme supply. Now that we have done this, there's actually three opportunities to look for possible short. That is first, to reject from the supply zone and continue downwards. Second one is taking out your extreme liquidity and then moving down. And the third one, that is most of the time the strongest, another deviation above this high to then continue your trend downwards. I do like a bit how this bottom is formed. The same way we're looking at those three taps on the highs, you also have that here on the bottom. You took down extreme liquidity here, you started moving up. So only looking for shorts here is not an option. Also, we're leaving a bunch of liquidity behind. So there could be a reason to trade towards that liquidity. When we take a look at the 50-minute, we have a beautiful bearish candle here with an imbalance above it. That shows a lot of strength. And also, when you were in the range with this low and this swing high, this was your last pullback before you broke out of that swing. So you're bearish until you start to gain this high. What caused the gain? This box right here. So for longs, we actually have not mitigated the demand just yet. And that's concerning to me because I want it to be mitigated as well. Locally, our trend is still looking bearish. We're making lower lows and we can expect lower highs for new lower lows. We are building up liquidity on the highs until we have taken enough on the lows to then continue towards the trend liquidity that we have built. So I want to see some kind of accumulation here. Maybe take out this low again, get your change of character, your order flow switch, and then continue trading up from here. Remember, our trend is down unless we can gain this high right here. Then we could possibly expect continuation towards the upside, towards these point of interest here. We have a possible another demand that could hold price up. So if a first zone fails, we have a second to look for possible longs if the market decides to give us so. After this zone, we are going to go towards this range low, and we on the higher time frame we could expect something like this. Step into the demand, change of character, and then continue trading up. So these are pretty much all the scenarios on the coin 0G. If you want to see more of these types of analysis, then make sure to join the Discord community in the description as well. I'll see you all there. Peace.